Good morning, everybody, and thank you for joining us today. I'm John Godfrey. I'm the Managing Director for Public Affairs, Policy and Research at the City UK. And thank you very much to everybody for taking time to join. And in particular, thanks to our speakers, Amal, Amin, Amy Barnes, Jill Lofts, and Harry Camilleri. I'm very much looking forward to hearing from them, and there will be opportunities to ask them questions. So this webinar is our latest in a series of member briefings, and today we're going to unpack some key reflections and takeaways from COP29 in Baku, Azerbaijan, what the outcomes mean for the UK financial and related professional services industry, and we'll have a bit of a look ahead to the road to COP30 in Brazil next year. Baku was pitched as the finance COP. The spotlight was on the urgent need to mobilize finance at a greater pace and scale to support climate action. It was also a key opportunity to pave the way for countries' new climate pledges, the nationally determined contributions, or NDCs, that are due early next year. Baku was a big event. More than 55,000 people were at COP29 to share ideas and solutions and build partnerships and coalitions to accelerate action on climate change. They included world leaders joined by civil society, businesses, philanthropy, youth, international organizations, and multilateral development banks and development finance institutions. And with finance at the heart of the agenda, there was a unique opportunity for our industry to engage with policymakers, government representatives, and other key stakeholders on how the public and private sectors can collaborate to fund sustainable projects and close the climate finance gap. A key focus during the Baku meeting was agreeing a new collective quantified goal, NCQG, a lot of acronyms. This agreed goal on climate finance to support developing countries in reducing their emissions and adapting to climate change. It was a tripling of finance to developing countries from previous goal of $100 billion to $300 billion annually by 2035. Important agreements were also reached on carbon markets, transparent climate reporting, and adaptation. So my colleagues from the City UK attended the first week of COP29, hosting and participating in some excellent and well-attended panels and roundtables focused on the critical role of the UK financial and related professional services in supporting the delivery of the Paris Agreement goals. So I'm delighted today to be joined by a set of excellent panelists who are on the ground in Baku, who will be able to share their first-hand reflections and insights from COP29. So we will be joined by Harry Camilleri, Jill Lofts, Amy Barnes, and Amal Amin. And I'm going to start with Harry, who is a researcher in climate diplomacy and geopolitics at E3G. So Harry, over to you to kick us off.
Thank you very much, John. It's a real pleasure to be here. So I'm going to start by going through some of the outcomes that we got from COP29, both inside and outside the negotiating room. And then I think some of the other panelists will go into more detail about what this means for the financial and professional services industry in London. So I'll quickly talk about three different buckets, what we got on finance, which was the big ticket item, what we got on mitigation, and then also some of the announcements on NDCs, national climate targets that came out of COP. So the new collective quantified goal, as John mentioned, quite an acronym heavy space, was kind of the main thing which going into COP people had on their agenda to be agreed. It replaced the previous 100 billion commitment, which was made by developed countries in 2009. And this was the culmination of a 3-year negotiating process. In the end, as John said, we got a kind of a nominal tripling of the figure to $300 billion by 2035. And this has more or less the same structure as the 100 billion goal. So it's money provided and directly mobilized by developed countries to developing countries, with one tweak, which is that there is some movement on what's called the contributor base or the donor base. So who is required to contribute? Insofar as developing countries, if they want, can contribute voluntarily to the goal. And all outflows from multilateral development banks will be counted towards this goal, even those that can be attributed initially to inflows from developing countries. So two slight tweaks. The other thing that we got is a recognition, I think, by all parties that the 300 billion by 2035 is insufficient. So a figure that had been going around a lot was the 1.3 trillion, which came from the independent high-level expert report, which is chaired by Vera Songwei and Nick Stern, which had a $1.3 trillion kind of price tag as the total external financing that developing countries would need by 2035. And this aim was acknowledged as an aspiration and a kind of Baku to Belém roadmap was instituted as a kind of way to try and think about how we might close that gap. Kind of reflecting on this, I think that many developing countries especially saw this goal as insufficient, but there are some useful hooks, not least that roadmap, to see it as a floor rather than a ceiling in terms of total finance outflows. And the other thing that I think is worth reflecting on is despite the fact that there was constrained fiscal space in many developed countries, there was a difficult geopolitical environment with the US election coming directly before, we were still able to get an outcome out, which shows that countries are still willing to invest in the multilateral system. The second kind of key outcome that it would be good to talk about is mitigation. So the energy transition was a huge focus last year. We had a really historic package in the global stocktake where all countries came together and committed to tripling renewable energy installation by 2030, doubling the annual rate of energy efficiency improvements by the same date, and transitioning away from fossil fuels in energy systems. I think that given the focus on finance, most countries weren't expecting real progress on mitigation at this COP. But I still think, even given those low expectations, countries were disappointed by how little progress there was in the kind of key mitigation-focused negotiations. So it's called the Mitigation Work Programme, and the dialogue which was instituted last year to follow up on the outcomes from the global stocktake. There was very little progress, and the UAE dialogue, which is the follow-up of the global stocktake, had no outcome at all. The negotiation was pushed forward to the June sessions next year. But I think what we did see is a lot of countries speaking out, especially into the second week of the COP, and saying that this was unacceptable, that we really needed a strong mitigation focus. And these kinds of smaller, more nimble coalitions of countries who were keen to advance progress in other settings really came through. So there was a group of countries who committed to no new coal, which included countries like Australia, who had planned coal in the pipeline. There was a group of countries who committed to aligning their NDCs on a straight line with kind of 2050 net zero targets, which is also really positive. And these more nimble coalitions can escape kind of bad faith blocking actors, who I think were in evidence at COP. At one point, the presidency released a text which showed Saudi Arabia making direct edits to mitigation-focused text, which caused pretty widespread shock. And then the third thing that I'll say very quickly is about the NDCs. So the nationally determined contributions weren't due at COP. They're not due until the end of February next year, but these are really important documents in charting national paths to 2035 in terms of the emissions reductions. And we were hopeful that at COP, a kind of vanguard of countries might come forward early and produce NDCs aligned with 1.5 degrees and set a really high benchmark for others to aim at. In the end, we didn't quite get that. We got two full 2035 NDCs, one from Brazil and one from the United Arab Emirates. Brazil's NDC contains a range, so it goes from 59 to 67% emissions reduction at the top end. That's quite good. It remains to be seen what will be delivered, but for both the UAE and for Brazil, there was quite weak language or no language on transitioning away from fossil fuels, which was one of our key benchmarks for the NDCs. We also got an announcement by the UK that when the NDC is released, it will contain an 81% emissions reduction target by 2035. And that was seen as a really positive move by the UK, which was pretty widely welcomed. As I mentioned before, one other thing that we saw was a group of countries from both the global north and global south committing to align their NDCs, with 1.5 by saying that they would be, if you plotted a trajectory of emissions from now to 2050 net zero targets, or when the net zero targets happen to be, that it would be at least as steep, at least a straight line, if not steeper. And that was very positive. But I think from now until February, we'll be looking for more countries to come forwards with really robust 1.5 degree aligned NDCs, and that will be a key factor which determines how successful COP30 is in Brazil next year. I think that's my 5 minutes up.
Thank you very much indeed, Harry. That was a great scene setter. The things that worked really well in Baku and the things that presented a bit more of a challenge and still need to be addressed. So I'd now like to invite Gillian Lofts, who is the Global Sustainable Finance Leader at EY, to make her opening remarks. Jill was an early entrant into this sector 25 years ago, and has been a professional advisor, an industry practitioner, and is now responsible for the delivery of sustainable finance services across strategy, product, services, risk, regulation, and reporting. So it's a very big brief. And Jill, I'm looking forward to hearing the EY perspective and your perspective.
Thank you very much, John. It's great to be here, and good morning, everybody. So I suppose I'll start off by saying that, at this year's COP, it was a very different macroeconomic environment and socio-political environment than when we all came together in Glasgow in 2021, and effectively GFANZ really gained momentum at that point in time. We've clearly seen low growth over that period. We've seen high inflation, we've seen high interest rates, we've seen fuel crisis, etc. So lots of things have happened globally on the global stage. That means that actually, I think the responses around financial services have moderated over that period. We now see financial services have a very focus on adhering to regulatory compliance, and that could be stress testing and scenario modelling around climate change. It could be implementation of reporting and disclosure requirements such as CSRD in Europe. But I think one of the things, and this is going back to Harry's point, there was a lot of discussion at this COP around finance, around public sector finance, government finance, donor finance. And of course, how does the financial services sector lean into that and really help to scale up any type of financing that you're talking about, whether it's for climate action or indeed sustainability more generally? Despite the level of both public and private and donor commitments to climate action, and from a financial perspective, the actual mobilization is pretty low. And a lot of the discussions that I was involved in at COP this year and last year was around how do you change that? How do you improve it? And how do you speed up the private sector involvement in financing? Clearly, there is a commerciality to any investing, insuring or banking that may be done within the sector. And of course, taking first loss risk and how that interplays with the overall lending, insuring or investing is critically important. So one of the things that we saw was a real look at case studies, because particularly when we're talking about financing in emerging markets and in developing economies, or indeed when you're financing new technology, then just fully understanding the different elements of the capital stack. So what role does government money play? What role do donor money play? And indeed, where does the insurance sector fit into the capital stack? And clearly, Amy is on after me, and I will leave the insurance discussion to her. But what I would say is at this COP, there was a lot of discussion about insurance and the absolutely fundamental role it can play across all types of climate financing during the transition. So, and I'm sure Amy will pick up on that. But as I said before, a real focus on how do we rewire financial systems so we can more effectively deploy capital to where it is needed, whether that's for technology type of projects or whether that is for transition, mitigation, etc. Then the sort of final two comments I'll make is we are seeing firms thinking about the commercial reality of transition. So as I said at the beginning, there's an element of what do we need to do to comply to the regulations around risk and reporting? But then there's another element which I think is under strategic review and consideration, which is how do we think of transition as a commercial strategy for our business, and what do we need in order for that to work for us? Part of an absolutely critical part of that is going to be engagement with the public sector, with MDBs and with governments. And I know we'll come on to that a little bit later. And I think there is, definitely more work to do there. And then the final point I'll just say is I think we do still have a lot of work to do, not just in financial services sector, but broadly across the economy and from a governmental perspective on the narrative, the language that we are using and how we engage with civil society. I still think that we are not quite getting that right in terms of what climate change means to individuals and what it means to their livelihood. So I think that's an area for more work to do. So, and with that, I will close and hand back to John. Thank you.
Thank you very much indeed, Jill. That was super, wide-ranging, some very insightful comments on the context. And I was at Glasgow and involved in GFANZ a bit. And yes, the world has moved on, but the problem and the challenge still very much remains. So I'd like now to hand the microphone, as it were, over to Amy. Amy Barnes is Head of Climate and Sustainability Strategy at Marsh, and she focuses particularly on the impact of a changing physical risk landscape, improving access to capital for green initiatives, and a much more thorough understanding of climate-related project risk. So, Amy, over to you, and perhaps this is a chance to discuss a little bit about the key role of the insurance sector, and indeed the mitigation point that Harry raised first off. So over to you, Amy.
Thank you so much. And thank you also to Jill. I'm always a little bit uncertain because I have selection bias in the type of sessions I attend at COP. So of course I think that insurance was everywhere, but it was very nice to hear that from you too. So insurance was definitely arrived. There was a real recognition of the role that the insurance industry has to play in supporting mitigation. But there was also a lot of concern about vulnerabilities in the insurance sector because there is so much more risk. That will insurance be able to operate in all areas in the way it currently does? So as a reminder to everyone that I'm sure everyone on this call is aware that insurance acts effectively as the lubricant to the financial services industry. People wouldn't fly planes, people wouldn't build hospitals if there was no insurance. And it's exactly the same with mitigation, that banks won't lend against projects unless those projects are insurable. So there's been a really big focus on what does the insurance industry need to do to step up? What does it need to do to make sure that it can support the new technologies that we need as a result of mitigation? But also, how can it do more? How can it make projects more bankable by virtue of reducing the credit risk, reducing revenue uncertainties? And so by thinking about risks in a much more structured way, rather than just saying de-risking and risk being a sort of a general bucket which makes it hard to address, starting to think about risk in terms of the strategic risk. Now that's the risk that equity typically takes and also typically gets a return for. But within the financial risks, there are areas that insurance can play. I've already mentioned credit risk. It could be providing revenue certainty, such as for renewables projects, providing insurance in case the sun doesn't shine or the wind doesn't blow to the extent that it was required, maybe providing political risk in the event that there are export controls on revenue. So there are a whole range of roles that either existing insurances can play or an evolution of existing insurances can play. You then get into the operational area, which is where insurance is probably most routinely thought of, ensuring those technologies, making sure that in the event that there is a hazard, that there are the funds available to provide the financial resilience to enable that asset to be rebuilt. but we're also seeing far more demand for things like performance guarantees, especially for scale-up technologies. So we may have technologies, sort of $25 million small-scale technologies, getting to be 200 million, getting to be $1 billion technology. How can we use insurance to support some of those issues? I would say, sort of veering slightly into Jill's world of FS generally, one of the comments we heard consistently from banks was the challenge that they have with some of those scale-up projects, because the underwriting costs for the financial services industry are the same for $1 billion project as they are for $100 million projects. So how do we make sure that we either aggregate the demand, that we make those projects as sort of replicable as possible, so we can make it efficient both for the insurance industry and the FS industry to support the scale-ups? But another pivot, in addition to insurance having a much bigger role at this COP, another pivot was a much bigger role for adaptation generally. I think in the past it was seen as stopping talking about, not talking about adaptation was seen as if you're giving up on mitigation. But we are living with the consequences of a changed climate, and I think we all know that more changes to come. And that's an area that I think there's a very long established role for insurance. However, there was quite a lot of frustration expressed by some people that insurance wasn't available in the most high-risk areas. And it reminded me of something that it says on our wall somewhere here, that one of our founders said 150 years ago, that the problem isn't insurance, that the problem is risk. And I think that's something that the insurance industry can bring a lot of tools to. We're a really efficient way of pricing risk, but in some areas where the risk becomes so high, insurance is no longer viable. So insurance works best the further you are away from the risk. As risk becomes certainty, insurance is no longer the tool. And so we need to use that risk pricing capability to make sure that we're keeping things as a risk, not as a certainty. So much bigger role for insurance there. And that insurance was really thinking about the damage of assets, but it was really exciting for me as well to see that people talking far more about the impact on people and how insurance can support people. So especially thinking about things like heat stress and water scarcity, and how can we provide financial resilience to communities who are affected by climate. You may have heard of the term the protection gap. How do we close the protection gap by getting financial services to people who are currently underserved? And so whether that's microinsurance to farmers in Colombia in case the coffee yield fails, or microinsurance to workers in the informal economy in India who may not be able to go to the market because of excessive heat. How do we provide them with the financial resilience to feed their family while they can't work for 3 days? But also hearing from some of those people, hearing about the dignity that financial resilience gives them in the way that they cope. So I'm very happy always to talk more about insurance, but John, let me hand back to you there.
Thank you very much indeed for that, Amy. And I'm always happy to hear about insurance markets, having worked in them myself. So I'm now going to move on to our next speaker, who's Amal Amin, who is the Managing Director and Head of Climate at BII. And BII is the British International Investment. That is the UK's development finance institution. And Amal has a role there leading teams on climate finance, gender and diversity investing, and technical assistance to the BII. She previously led the climate change team and implemented BII's first climate strategy. She was an advisor to the UK COP26 presidency, the famous Glasgow COP, and therefore has a wealth of experience in this space. And can I, just before you start, Amal, remind people, please post questions on the Q&A function, and we look forward to a lively panel discussion in a few minutes' time. So don't hold back on your questions. Amal, over to you.
Great, thank you. And thank you very much for the invitation to join you in this event. So as John highlighted, BII, British International Investment, we're the UK's DFI and impact investor. So we do private investments in Africa and Asia. We also the Caribbean now as well. And we're very much focused on trying to deliver on many of the goals that were actually agreed under the Baku outcomes, particularly, and I know Harry talked a bit about this, but under the NCQG, where, as the UK's DFI, we actually are already contributing to the commitment, to the $100 billion commitment per year. And of course, will be part of the $300 billion commitment per year. But also, I think very interestingly, this focus on mobilisation now to look to reach $1.3 trillion per year by 2035 is something very much aligned to how we are already working to increase our mobilisation with commercial investors and financiers. So. The Prime Minister actually at New York Climate Week announced a new mobilisation facility for BII. So that is going to be very important as we look to increase mobilisation of commercial investors and contribute to the 1.3 trillion. And very much builds on our own approach so far, where we have been really, I would say, quite pioneering in building out platforms and building out investable opportunities for commercial investors in Asia and in Africa. So, for example, in India, we invested in a platform, a renewable energy platform, a utility scale renewables platform, IANA, which has already mobilised other investors, including, interestingly, the Indian National Infrastructure Investment Fund, which is India's national sovereign wealth fund, but as well as commercial investors, BP Light Group being part of that too. I think the NCQG now does set an ambitious agenda for us. I mean, we are obviously referenced indirectly as one of those bilateral partners that will be key to delivering on the NCQG. And of course, the mobilisation agenda is going to be critical, particularly to really accelerate the energy transition in countries that we know need to decarbonise as fast as possible if we're to be able to stay within reach of the 1.5 degree scenario. So very much part of that. But I think also building on the points that the last speaker just made, we're also very focused on how we can do more on climate adaptation. As part of our own climate strategy, we have prioritised adaptation as one of the 3 pillars, alongside net zero and also the focus on the just transition. For adaptation, we're very much looking to ensure that all of our investments are resilient and particularly infrastructure, but also we invest in food and agriculture companies. So critically looking at how their supply chains can be more resilient moving forward, as well as thinking about adaptation across value chains in manufacturing, for example. We know, I mean, as investors in Africa and Asia, our companies already experiencing the impacts of climate change. And actually, we launched a report earlier this year, the Emerging Markets Report, where we interviewed for the 3rd year now, actually, our investees to understand or to gauge their understanding of climate risks as well as opportunities. And it's very clear that our companies are becoming increasingly concerned about climate risk, physical climate risk in particular, given risks to their business continuity. And so that's very much part of how we're engaging with our companies, where we can provide technical assistance, and we're very much focused on building the capacity of our portfolio companies so that they can better manage climate risk moving forward. But we've also been very focused on investing in companies that can bring adaptation resiliency services. And we have another concessional pot of funding from our shareholder, UK government, FCDO, where we are able, the Climate Innovation Facility, which has enabled us to really invest in some really innovative, very early stage companies that are really starting to innovate in a way to address some of the climate risks in our markets. Many of these companies are related to ag tech, not surprisingly, agriculture being such a vulnerable sector. Fintech often being part of these solutions, and insurance very much part of that in many cases as well. We invested in Blue Orchard earlier this year, a fund providing micro insurance for smallholder farmers and MFIs. So very much core to our focus as we look at how we can increase finance and help provide those services that will be necessary to enable communities, other sectors to adapt to the changing climate. So I think Baku and the NCQG and now the roadmap from Baku to Belém does really provide quite a sort of ambitious agenda really for us as a DFI as we look to scale, as I said, in mobilising, but also as we look to increase financing for climate adaptation. And also recognising the importance of the lower income, the LDCs, the vulnerable countries that are increasingly wanting to attract climate finance. I mean, we ourselves have been very internally looking at how we can help increase financing for building out manufacturing that will be in line with net zero, so green manufacturing, food and agriculture, as I mentioned. I mean, two really important sectors that are hard to abate sectors, but really critical to development and economic growth as well. So really welcome the opportunity to be able to engage with this group, with the City UK, because I know certainly as the UK's DFI, we're keen to explore how we can collaborate further with others in the City of London and beyond.
Fantastic. Thank you very much indeed, Amal. It's a very full programme that you are running out of BII, and I think the UK should be very proud of what you're doing with your teams there. We're going to now open up for questions, and I'm hoping everybody can see the panel on their screens. So keep the questions coming in on the Q&A function, and I will start, if I may, with one for all questions for all panelists. So please do pile in. But I think Jill, really, I think this one's mainly for you. NDCs don't all get announced until the spring, as discussed, till February. But the UK has set out its ambitious NDC target, and what does that mean for our industry, and how should we engage as an industry and a sector with the UK government on the implementation and financing mechanisms that they will need to use to deliver on that headline?
So super simple question then, John. Look, I think we, you know, and I can see in the chat we've had a question around MDB reform as well. I'll go back to the fact that the way that the financial systems are working at the moment does need continual enhancement and continual change. By our estimations, there's been something like 20 trillion, over 20 trillion committed for climate finance, with only 1.1 trillion deployed. So this is like, hopefully you can get an idea of what I'm talking about here. I think when we look at case studies, that's super helpful because it explains how partnerships have come together, how different parties, whether that's government, insurance, asset management, MDB, donors, how different parties have come together and made an investment or a financing or some insurance actually work in real life. So I think case studies are super, super important. And there's some really good papers out there on blended finance, on insurance case studies, on banking case studies. So I think case studies is super important, whether you're talking about developed or developing countries. The other thing around engagement is I think we all have to work on this, right? I don't believe there is currently a defined model of how this works. One of the things that we have talked about is engagement with financial services and private sector as the NDCs are being developed, so that they can add in the types of financing that are required, the risk mitigation that's required, the commercial reality, whether you're talking about infrastructure investment, whether you're talking about clean tech investment. So discussion around what financing is needed in order for the NDC to happen. And that I think on part of that is, an ongoing discussion between government, financial services, and, private sector more generally. And another part of it is around, sorry, I'm losing my train of thought here, sorry. Another part of it is what does the financial sector need in order to feel comfortable with the net zero plan or the decarbonisation plan that the country has. So it needs to be credible. It's good if it has an independent verification, like the Climate Change Commission. I'd say financial services are typically looking for sector level plans from the high emitting sectors. But, ultimately, one of the things that, one of my colleagues has said in some of these discussions, which I think really rings true, is the more precise we can be about what it is we need in order to mobilise capital, the more helpful that is going to be for the UK government, or indeed any of the other governments globally.
Thank you very much indeed, Jill. It is indeed all about execution and precision. And I think the case studies point is a really strong one. We need to show how this can be done. So I'll move to another question. And there's an observation that the UK stepped up somewhat at COP in Baku. We're providing a little bit more global leadership on this topic than we have. So the question really is, against that background, how does the city's sustainable finance sector play a leading role? What do we need to do to be visible both in the live debates and also in investing, insuring, banking, green projects across the globe? Maybe Amal Lee, you could lead us off on that one. And I think there's a sort of subtext to it, which is how can our members and our sector work ever more closely with BII so we can leverage in private capital to help you?
Yes, so I think, as you say, I mean, I think the UK and the City of London in particular has a key role to play in leading in the implementation now of some of the commitments that were made in Baku. I think what has been a very interesting initiative this last year has been the Transition Finance Market Review, which builds on the Transition Plan Task Force, the TPT, and development of guidance notes. I think those are going to be really helpful in better guiding what kind of financing can enable the transition, in addition to climate finance. So, at BI we have a target for climate finance. I think last year around 46% of our portfolio of our commitments last year were climate financed. At the same time, the focus on transition finance is becoming increasingly important. So how do we, and with the City of London, how can we really drive decarbonisation, across the real economy? And we very much, we partner with the financial sector particularly in our markets. We work with them to help build their capacity around sustainable finance as well. And so, of course, in doing so, they can also be valuable potential opportunities for co-financing, co-investment from the City of London. I think as we think about mobilisation, as I say, we now are keen to engage more directly to understand how we can mobilise more commercial capital into our markets, because that 1.3 trillion, it's very, very clear that that really does require us all to step up in how we are looking to mobilise commercial investors. So I think we're very keen to continue to engage through dialogues like this, and of course here in London there are different forums that also provide opportunity for progressing partnerships, but of course also how we can work together in market is key.
Terrific. And Harry, I think you wanted to add some observations.
I just wanted to make two slightly more general framing points. I think it's a really good question, and I think it's worth acknowledging the premise of this question, which is that the UK really did play a leadership role at COP, and I think that the UK deserves credit for doing that. Most developed countries, most G7 countries, did not leave COP29 with their reputation as international climate leaders enhanced, but the UK did. Played a very important personal convening role with Ed Miliband in negotiations for the NCQG and getting a deal over the line. The announcement of the 81% NDC target was very well received, and the UK's announcement of a Clean Power Alliance, which was something that had been kind of foreshadowed before, was also well received when, in general, mitigation ambition wasn't there at COP. So I think that we really, as a UK community, have an opportunity to build on this leadership. And we should be engaging with government as much as possible. On the points that Amal was making, I'm not a financial services sector professional, but I do also think it's worth just to kind of in the broader kind of macro environment of climate finance is that at least nominally, climate finance comes out of development budgets in Western countries, and these are shrinking. I mean, we have seen aid cuts in France, in Germany. We've seen a de facto aid cut in the UK with in-donor refugee costs. And the US's international climate finance looks like it will fall off a cliff with the election of Trump. So I think that one really important message that this community can be giving to the UK and other donor governments is about value for money. And I think making those arguments that Amal was making, that a little bit of public capital can leverage large amounts of private finance and deliver really transformational outcomes on the ground, has always been relevant, but it is relevant now more than ever as the pot is increasingly shrinking.
And while I've got you there, Harry, there's another question coming, which is from your experience at the negotiations at COP, how can the private sector engage more effectively with the formal negotiations? And do we need to build a better dialogue between what's going on at the negotiations in the plenary hall and the conversations happening outside?
Yes, I think so. I think that we saw this coming through with the NCQG negotiations, where there was a lack of understanding, I think it's probably fair to say, by a lot of governments about what could realistically be delivered in terms of a financial outcome. And I think that the financial services sector has a lot to say in that environment. I think as Amy and Amal were talking about in terms of adaptation and risk perception, the financial services sector has a lot to add to those discussions as well. I think in general, we need to be engaging. We shouldn't see COP as a 2-week process that happens at the end of every year, but we should see it as a much longer process and we need to start engaging at a much, it shouldn't be a seasonal kind of seasonal hobby. Like we should be doing this from the start of the year and building these relationships and establishing negotiating positions. I think there's a role for the private sector there. I think there's a role for civil society there and all kinds of different stakeholders. And I think for organisations like the City UK and for other kind of trade bodies, there's a really, really important role for strengthening these institutional methods for collaboration as we kind of build, shared positions and exchange information.
Super, thanks. So we want to sort of slightly blur the boundaries between the green and the blue parts of the COP. I think that's a very good point. And likewise, the point that this is a kind of year-round activity. Amal, do you want to add to that?
I just wanted to reinforce that because I think once this is being discussed and negotiated in a plenary, I mean, I think there's limited scope to really influence the outcomes at that point. But it's I think what is really important to note is that this now, and I think the NCQG does really reflect this, is it really does now require much deeper dialogue between governments and their own financial sectors, private sector, and in thinking through, well, what is really needed now to unlock the private investment that is so essential for countries to be able to develop in a net zero and resilient pathway, and whether that's new technologies, whether that's mobilizing new sources of capital. And so definitely should think of this as a sort of ongoing conversation that has to happen in capitals. And I think we're lucky that in the UK, the City of London is really a true centre for sustainable finance. And so, the dialogue that's happening here can definitely influence what happens in a COP outcome. I wouldn't, and I think that we need to see it in that way rather than assuming what goes on in the confines of a 2-week process is what's really is what all that counts, because it often it's about building that understanding way before you get to the COP. And I think particularly in our markets where we know we need to, and as we are BII, to deepen domestic capital markets as well in countries, which will also be important for attracting international capital flows.
Absolutely right. And Jill, I think you got a hand up as well.
Yeah, just a quick one. So I was just going to, agree with all of that, and I'm going to layer on top by saying, the green zone is the private sector zone. And one of the things that we've been thinking about as the private sector, we've all kind of fallen into that process. But as we are the private sector, actually, how can we make the green zone better? How can we create a green zone that is output based, right? So it's almost like, what do we do in the private sector to work with the next presidency to not only have the lines blurred between blue and green, and as we've said, work continuously throughout the year, but then also create a green zone that from a private sector perspective, we're like, yeah, that is really nailing the private sector part of this conference as well.
That's an excellent thought. Amy, I think you wanted to come in on the same question.
Well, yeah, just building really, I think, on what Ari was saying about we shouldn't, or maybe it was Amal. Anyway, what somebody said was about we shouldn't just see the COP as one discrete event, as opposed to it's an ongoing process. And there are opportunities for collaboration all the time. I was speaking with a part of government this morning who are setting standards for part of the decarbonising agenda, and they have said, please can we have insurers at the table, or the insurance community at the table, so as we're building that standards, it can be fit for purpose and we're not tripped up further down the line. I moderated a panel at COP where I had a California regulator and a leader from a food and beverage large industry player, and the California regulator was saying, what are the frictions that I cannot see that I can help unblock? And so it always sounds a bit trite to say dialogue, but the dialogue I've found from government is very open to this to this dialogue, and it's kind of up to the private sector to open the door that's unlocked and waiting for us to express our opinions and say, this is what these are the frameworks we need from you for us to be able to work most effectively.
Absolutely. And I mean, government here, and I suspect governments in many parts of the world are absolutely keen to get ideas coming through. They need practical solutions. And we are the people who can provide those practical solutions. And just staying with you for a second, Amy, sorry to interrupt your sneeze, but just stay with you a second. And there's a question coming about insurance. And I think a recognition that insurance has a huge role in tackling this challenge globally as part of a whole systems approach. But what things does the insurance industry need to happen in order to move forward with, for example, microfinance and some of the examples you described?
So if I'm going to stay away from the insurance regulation and the sort of the minutiae of insurance and really focus on the big picture, which comes down to risk under. Well, no, I'm going to get into some of the minutiae. Okay, so there's first of all the risk understanding. So if I stay on transition and mitigation, which could be in developing or emerging economies, but as we see new technologies rolled out, the insurance sector needs to understand those technologies, and really they would like to have a perspective early so they can help risk be designed out of the system. So if we think about the 300 billion, the NCQG, a lot of that is going to be in capital projects that are going to be deployed. We need to make sure that that is de-risked as it's being deployed, that as we action mitigation, that we are thinking about adaptation, that we are building the assets that we need to decarbonize the economy in a way that is resilient to the climate of the future. So there's a huge risk piece that sits there. If we then think about people and how do we support communities, this protection gap issue, there's often one problem of, I don't want to say education, but familiarity, just familiarity and trust in financial products. And having somebody like me show up and say, give me some money now from your limited resources in the event that maybe you'll get some in the future is not effective. We need people from those communities to be involved in the design of the solutions and the services and how we support those communities. And we need people from those communities to be the advocates for those. We need technology platforms to close the financial services gap. I'm speaking really fast because I can see Harry's got his hand up too. And so there are sort of some practical things about making sure when we then think about at an individual level that we are solving the problems that people need. And to give you a very specific example for that, some women in the informal sector in India have been saying that they get a huge amount of value, not just from the financial payment that insurance give, but also the infrastructure and the services that they're able to provide support in times of crisis. And so designing products that are fixed for purpose, influenced and informed by the people that need those products, and then communicated to the communities by people from their communities.
Thanks. Harry.
Sorry, I was just agreeing with Amy so strongly that I felt the need to come in. I think this is something really, really fundamental about the COP process and kind of going from the micro to the macro. There's always a lot of COP skepticism, and towards the end of the first week at COP, there are always articles run in major newspapers saying, "What's the point? We come here, we argue for 2 weeks about semantics, and it's very bureaucratic and it's very slow moving and it never makes any progress." But I think that the point that you were making, Amy, about adaptation and resilience and about the importance of communities gets to something really important, which is that COP is the one place in the climate regime where the small island developing states are represented, where the least developed countries are represented. It's not like the G7, it's not like the G20, it's not even like the BRICS, it's not like shareholding at the World Bank, it's not like shareholding at the IMF. Everyone sees one another as an equal. And for these countries, actually, who tend to have very small, very low emissions, the mitigation conversation obviously is relevant in terms of its impacts, but it's not so relevant in terms of the action. What's really relevant to those countries is adaptation and the points that you're making. And I think that in order for the deal that underlies COP to work, to make this work for those countries, the conversation about adaptation is absolutely fundamental. So I think it's really important that we're talking about it as well as mitigation.
Terrific, thanks. I'm going to squeeze in one last question. So this doesn't require a complicated answer from anybody, I don't think. But the point was made. Actually, you anticipated it, Harry, in saying that the reporting of COP here, for example, made it all look a lot sort of less productive than in reality it was, and how it felt on the ground, which kind of leads you to wonder, somebody mentioned the language we use, the communications around climate, and the fact that the world, the questioner mentions the fact that the world may be becoming more difficult. We see more polarization in views on climate. We see the ESG debate becoming sort of more heated. Should we be optimistic or pessimistic about how future COPs and in particular Brazil are going to develop? I'm hoping you're going to be optimistic, but I'd love to hear from each of you quickly on that.
I'll lead by saying it has to be optimism, and I think there's less divisiveness around climate than there is on broader ESG. I was at events that were attended by both red and blue leading senators from the US who are all aligned because they're feeling the effects on their communities. So clearly when you're at COP, you're with a cohort, but because so many communities are feeling the effect that whatever your political persuasion, everybody wants to protect the communities that they serve. And so I feel very optimistic that there is alignment around needing to serve those communities. How we then decarbonize, I think, is where we'll see more of the tension and division.
Super. So, Jill, optimist or pessimist or realist?
I'm going to go for the realist. I'll go back to what I said earlier. I do think there's more work to do on the narrative. So to Amy's point, there are representatives who are representing their constituents there, but I still believe there's more work to do for individuals to understand when we're talking about climate change, what it means and how it affects them individually and their livelihoods. So I'm optimistic, but we've got to do work on the narrative.
Terrific. Amal?
Thank you. So I think I suppose maybe realistic when thinking, particularly, I mean, the UNFCCC, and I used to negotiate, haven't negotiated since COP13, in fact, but I mean, I think it really is quite a remarkable multilateral environmental agreement in many respects. It gets a lot of attention, and so of course, the sort of high stakes at the end, which the media obviously pick up on. But I think what is really interesting is the recognition now that around the real driving change across the real economy now it's very much part of the agreement that's come out of Baku, or the agreements, as we've seen, and recognizing that other initiatives such as the Global Clean Power Alliance that the UK is leading, these types of initiatives are going to be so critical. And ourselves as a DFI, we're already looking to scale. We're not waiting for sort of UN text to incentivize us, but I think we certainly recognise that we do need to continue to step up.
Super. And Harry, I'm marking you down as one of life's optimists. I think we can figure that out from your comments so far. So I'm not going to come back to you now because we are sadly out of time. And the only thing remaining for me to do is to say thank you to everyone for joining us today, and a particular thanks to our four panelists, Jill, Amal, Amy, and Harry. You have been fantastic, and I hope everybody on the call feels energized and excited about the next stage of the climate mission. So thank you all for joining, and goodbye.